Steve, what's going on this Monday?
Hey Scott, what's happening over there? Steve, happy Monday, my friend.
Well, happy Monday. Yes. Weekend over.
And I do believe the Happy Mondays were maybe might still be a band. I don't know why that came into my mind, but that's a band. In any case, welcome to Office Hours, another version or another edition of Office Hours. Today's April 8th. Spring is definitely in the air. So before we get rolling here, just want to thank everybody for popping in, and let's take care of the legal disclaimer here before we get going. Just want to make sure everyone in attendance is aware of the fact that all of the information that myself, Steve, Andy, Sean, that we present in these webinars is strictly for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or some other licensed individual that can help you with that type of stuff, because we're just guys that like to trade and use the super cool technology that we help develop and point out good trading opportunities. So everything we share with you is for educational purposes only. All right, so for the regular attendees in the room, you know the drill here. Please bear with us because attendance is growing on the rise, as I can see from the attendee list here, telling me there's probably a fair amount of new people in here. So we always like to take a little bit of time here at the beginning of the webinar to let everyone know about the vibrant community and the webinar schedule that we've developed around the technology that is TI Pro. At the top here, you can see the trading room, recently overhauled with a new, friendlier, cooler software. The room is moderated by Barry Anderson. Barry's been doing this for a number of years, and I forget how many years he's been doing it now. Long time, long time. In any case, 400, 500, 600 people, depending on the day, in the trading room. Barry opens the doors 30 minutes before the open and showcases his trading style along with the way that he uses TI Pro, also Brokerage Plus and Holly as well. So if you've shopped around trading rooms online, you know that most of them that are worth their salt are not free, but that is the cost of our trading room. It's free. Okay, when you become part of the TI community, you can go in there, observe, learn. A lot of experienced traders in there, along with Barry. So take advantage of that resource if you haven't done so already. Of course, today's Monday, and you get yours truly, myself and Steve, as usual. And then Steve's going to take the steering wheel tomorrow, Tuesday's trade of the week. Andy Linloff's going to ride shotgun with him. Middle of the week rolls around, we like to change it up, bring in the CEO and founder of Trade Ideas, Dan Merkin, along with our CTO, Chief Technical Officer, Brad Williams. Always a good way to get features that might be coming down the pipeline or little peeks into the future of up and coming functionality, but always entertaining with those two. Andy is going to round out the 5 p.m. Eastern webinars on Thursday with Andy's Trading Studio, and I get the privilege of riding shotgun with him. Friday rolls around and we change it up, starting at 11 a.m. Eastern and going typically until 2 p.m. Eastern. We allocate 3 hours for the Friday support session. Ever-growing crowd in there as well. It's a really cool place to come because you can ask anything TI related, whether it's strategy, fabrication, Brokerage Plus, Holly AI. Anything is fair game in the Friday support session, and you got myself, Steve, Andy, and Sean in there, all knocking our heads together, trying to address your questions as quickly and efficiently as possible. So that's what we have going on with the 5 p.m. Eastern webinars, with the exception of Friday. And then we also have these 4, TI University. These run Monday through Thursday and start at 12 p.m. Eastern each day. Beginner 101 on Monday, Advanced 401 on Thursday, 201 Tuesdays, and Intermediate Wednesdays. So if you haven't taken advantage of these, especially if you're new to the software, highly recommend absorbing all 3 of these. We do recommend that you take these in order, because what you learn in 101 you'll need to build and understand so that you can comprehend 201. We do have these recorded also on our YouTube channel, Trade Ideas YouTube channel. So, you know, if work prevents you from attending these things, you can always go and watch the pre-recorded versions because the content does not change. All right, So there you have it, our 9 webinars weekly that are being hosted by all of us. Always like to show the next slide because it kind of gives you an idea of how our client base has been expanding since we introduced the first AI module back in the very beginning. As you can see here, 2016. And boy, what a ride it's been. Not only do we have one module, but now we have 3 AI modules. We've got Holly 1.0, Holly 2.0, and Holly Neo, and we're going to be talking about all of those modules in just a moment here. But you know, the chart speaks 1,000 words here. What's it going to look like at the end of 2019? Well, don't know for sure, but I can probably take a guess here. All right, now on to the fun stuff. Here's the itinerary for today, and Steve, it is that time. If you're ready to take it,
Joy, sure.
kick the baton on over to you, and let's just take a look at these major tracking ETFs.
Why not? Hang on a second. All right, there we go. All right, welcome to my desktop. Lots happened. I mean, tale of 2 completely different tapes here in just a matter of 3 or 4 months. You know, we had the old death cross back here, where the 50 crossed below the 200-day. We had a bear market down here. And we had a really nice steady recovery that just kind of chewed through all the levels it needed to get through. And lo and behold, here we are back at the golden cross. Again, I highlight these because these are 2 very large, slow-moving oil tankers, if you will. And this is the kind of stuff that the big hedge funds and the big money manager funds and mutual funds basically try and make a lot of their decisions on. So it's probably one of the first stops in a decision tree. Is the market above the 200-day? If yes, long. You know, if not, go to bonds, etc. So, you know, there's that notable event for sure. But, you know, zooming in, the way the market's been the last week and a half, it's been really weird. You know, just gap up, gap down, and tiny little ranges, typically kind of closing close to where they opened. I mean, for the most part, the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, you know, 11 or 12 days, we've had half of them have been pretty much days where you close where you open and the money's been made on the overnight gap. The other thing I've noticed the last few days is this super declining average slope of volume. Now, don't ever argue with price. Price comes first, like Brian Shannon says, only price pays. But it is notable to see, you know, this black line. This black line has been the average volume. Let me get rid of that stuff and zoom out a little bit. It's been the average volume of this market. And as you can see, you know, in moments of turmoil and trouble, we're well above those moments. Back here, we were slightly above in these moments of volatility that we had. But then we're just kind of going back to sleep now with volumes. And you know that can cut both ways. It can be a complacent rally where the markets maybe run out of short sellers. They've all expended all of their energy, and there's not a lot of short selling and short covering to propel the market higher. And so we're just kind of left with trickle in mutual fund 401k buying. But that's not going to last forever. I mean, we're above our 3 moving averages. They're all fanned out nicely. And the one thing that does stand out to me here is this noticeable gap back in the S&Ps. This is the kind of gap that can wipe out 6 days of trading in one fell swoop, you know, within a couple of hours of the open even. So that's on the table, and that would be normal, healthy, nothing wrong with that. Bull market action, backing and filling as they call it, 3 steps forward, 2 steps back. But there's a giant void there that's just kind of asking for it, especially when you consider the distance that we currently are above the moving averages. So I wouldn't be surprised to see some sort of a pullback, which would still give us higher lows along the way and nothing really to get upset about. But that's in play, I think, for certain. I'm always got that in the back of my mind here with where we are. But the declining volume is kind of curious. But that's it. And then going back to every other ETF we're going to look at, I've redrawn a lot of these orange lines. There's really only 2 in play at the moment that I can see. There's this pivot point back here that gave us some fits, but lines up perfectly with the 3 sisters back here, which I coined. And then the only thing above that is, I think, a foregone conclusion of coming back and testing all-time highs from last fall. I mean, we're close enough now. We're in the neighborhood. Typically, price action, when you're close in your neighborhood, you're going to drop by and say hello. But it's quite possible, looking at that picture there, this little gap could be filled, you know, before we come back and try and assault That's a 1 and a 2, by the way, those levels. So, trying not to get too tricky, too many chess moves down the board, but that's what I'm seeing in the S&P. I think these uppers bands are going to be challenged again at some point, but whether or not we blow off a little energy, we're kind of running out of energy, creeping out on the ledge, on the tree branch, so to speak, and there could come a day where the tree branch does snap and we fill that gap pretty quickly on the open. Looking at the same relative issues and the Qs, the gap is not as pronounced, but it's still there nonetheless. Moving averages are fanned out, and also the Qs, the NASDAQ are so close to all-time highs, they're going to have to drop by and say hi. I just don't know if it's going to be in the next few days or give us a little bit of minor reset, dig back into the moving averages, and then maybe try and assault it. We'll see. Lastly, the Dow is also above its 200-day and has been for a while, skipping along it. Not too extended, actually. The Dow doesn't look as extended, but still, I think it's worth putting up here the all-time high in the Dow, so we know what we're probably going to be shooting for here. Again, a decent gap in there that could very well be filled. But the funny one is the IWM. It's been bringing up the rear, and I'm looking at this difficult time it's had a couple times at the 200-day moving average. And in the last 2 days, here we are trying to move through that 200-day moving average, and it very well could do it. It kind of reminded me of like an animal in the African Serengeti, big herd of animals, and they're looking back, and this is the weak one. It's got the bad leg, but he's still hanging, and they're all looking back, and he's stuck at the watering hole, trying not to get eaten here and make it through the watering hole this time. And if you can, that's probably going to be another feather in the cap for the bulls to get all 4 ETFs in confirmation that they're back trading above their 200-day moving average, and we're close to a golden cross back here again as well with that 50 and 200-day. Just to appease my memory, we had a golden cross in the Dow, and we definitely had a golden cross in the NASDAQ. So the IWM is the lagger. He's the weak one behind in the herd, and the herd's trying to figure out if they're going to go back and help him or if they're just going to take off, and hopefully he'll find his way. But that's the small cap Russell. A lot of work to get back to highs. Therefore, one could say, well, maybe this is where the meat's going to be on the bone. If the market does continue to work higher and the market continues to pass the baton, maybe the Russell 2000 small cap stocks are going to start to get some love here in the second quarter. So that's pretty much all I see. Back to you, Jamie, unless you want to add something.
Nope, I concur, Dr. Steve. Good stuff. That's funny that you bring up, the antelope.
The herd animal.
Yeah, I like that. Funny thing is, I don't do a lot of active trading through Robinhood, but I do have a small account there just because it's a long time ago I wanted to see what it was all about. What's this phone interface like? So it's handy for checking quotes and stuff because it's real-time data. Anyway, the reason I'm saying that is because have you seen what they're doing with the Robinhood snacks, as they call them? Their little informational blurbs they spit out. Well, the
snacks.
The snack today was the IWM. What's the difference between it and the S&P 500? And I was like, okay, I guess that's a good topic to discuss.
Sure, why not?
Yeah.
Bring attention to it.
Yeah, I found that amusing. In any case, let me grab the screen from you here real quick.
Alrighty.
All right, ladies and gents. Wow. Okay, so today, as far as expectations go, it was not, well, it never is easy, but today was a little bit more difficult trying to figure out what type of action we might have. One of the main things that I like to key off of after the first 15 minutes is my favorite CC window that's tracking, the big cap stocks, anything between or capitalized with a market cap of 4 billion or higher, with some accelerated 1-minute volume hitting highs and lows, and then take a peek what that metric is after the first 15 minutes. This is the window, but obviously this is not, don't think I've ever seen anything like that, but that's just because the window reset. But here's what we had after the first 15 minutes today, okay? Now, if you've been following this big cap compare count window over the past couple of weeks, it's been pretty much on fire, okay? But a lot of the activity has been to the upside, but it's been uncanny how accurate it has been. Now today, a little bit different of a story. After the first 15 minutes, instead of seeing the green bias that we're typically accustomed to seeing, what do we have here? We had a 60% bias to the downside. Now, today, we have to discount that. And what I mean by that is Here we are looking at the SPY. This is the first 15-minute candle. When we have this type of event, in other words, we could call this a wide range bar for the SPY. When we have a wide range bar to the upside or the downside, well, then everything was going down. All right. So this window right here is the most beneficial when we just have a little bit of movement, and certainly not this big whoosh of a red stick here, because, well, the whole market was going down. So in essence, this guy was kind of more or less neutered today. All right. The wind was blowing really, really hard, 100 miles an hour for a brief period of time, but then guess what? It stopped, and then pretty much that was just a hair off the bottom, as we can see right here. So right off the bat, it's like, well, my major navigation system just, it's malfunctioning. Sometimes the move coincides with the count. So right off the bat, one of my favorite things to help temper my expectations was kind of null and void. So I just kind of wanted to point that out. And of course, what do we have? We just had the gyration grind back to close the gap. And what do we finish here? We finished right at down 1/10%, or positive 1/10%. And more importantly, we did it all on pretty low volume. So, trading is never easy. Some days are more difficult than others. It was not easy finding quality setups today. And when we take a look at Holly here, she's gonna agree with me on that, because looking at the Holly modules over here in the channel bar, we had Grail, Holly Grail 1.0, down 3 cents on 9 trades. But if we can see the little equity curve here, and I tell you what, just to make it easier here, let me pull my strategy panel over, and we'll look at that equity curve in a little bit bigger of an image here. So in the first part of the day, you can swing nice upticks in the equity curve, but as soon as you got close to the dollar mark, a little choppiness here, and then boom, back down to the flat level. And it seems to me like even the manual trades that I'll showcase here in a little bit from some of my bread and butter tickers, we had a few on a day like today. A lot of the times when the money's there, if you didn't take it, it wasn't there for too much longer. So she was profitable for a brief period before gravitating back down to that zero line. Let's see, 2.0. Up a tiny bit on the open and then underwater for the remainder of the day in risk off, and that is the way that module finished. And then lastly, Neo. No big surprise to see Neo having a little bit of issue here, because it is the most aggressive of the AI modules. So typically you'll see it post bigger winning days and bigger losing days. Risk off on this one, same thing, almost up a little over a point, but if you didn't act quickly, whoosh, back down. And then risk on is what this one finished at, down 27 cents, pretty much holding everything until the duration. So the statistical model known as Holly, having a hard time finding any purchase today. A lot of statistical noise, we could say, out there. But as always, if we get used to identifying some of her early exits or timed exits and try to pluck some of the risk on, risk off spread, there were some good well, let me backtrack. There were some opportunities today. But typically when we look at risk on, once again, I don't like to use the word easy, but compared to looking at normal risk on trades where the spread is large, these are going to look a little bit different today. All right, so let's just start off with this one down here, which is the biggest variant, right? Holly loses 52 cents in risk off mode in a reduced risk. Let's see. Okay, so here we are looking at the 15-minute candles. Holly makes an entry right here, barely gets in the money, and probably hardly any with a little bit of slippage built in there, which we're going to talk about here at the bottom of the Holly segment. But, just the opposite of what we'd like a trade to do. Tops out at this 15-minute candle here, the start of the next one, just boom, boom, boom. Looks like it's over and done, right? But look, this one barely hung in, right? Why did Holly cover it? Well, she did pull the plug a bit early, right? Trade wasn't working. She does have the ability to either close a winner or a loser out early on reduced risk or profit save. At this point, down 52 cents, when we just barely tickled the stop loss there, or did not tickle it. So on a day like today, first and foremost, expectations. My compare count coincided with the down move. That tells me right off the bat, well, it's going to be long, it's going to be shorts today, but whatever you do, be nimble, don't get too greedy, close out profits, don't sit there and wait and get greedy. So on the same token, when we're thinking about stops, and of course, risk on, risk off, stick to my hard stop. If I am profitable and I'm trying to hang in there for a little bit more, on a day like today, it would have been very difficult to use the 50-50 rule where we plug out of half with Holly and try to keep the other half for a break even, and we'll get into that in a moment. But, on a day like today, it's pretty much you just have to make the decision. Am I going to stick to my hard stops, or am I going to try to get cute and go trailing stops or break even? And when we get to some of these other ones, you'll see, maybe if one or two on the break even would have kept you in, for the most part, it was a pretty slippery slope. So, on this one, in hindsight, it's easy to go, well, after this little doji close right here, we could have stayed in because a hard stop is a hard stop. That's what we're willing to lose. She didn't get stopped out on this one. So if you're in the trade and you stuck to your hard stop, hey, the trade recuperated. We could always key a little bit off of this 10-period SMA right here in the moment, at this point in time when we're a little uncertain. This is definitely a good sign right here. Doji close, almost a stop out, getting back above that 10-period SMA. If you weren't in this trade and you saw Holly getting down in the trade, would not have been a very bad entry at all here, especially with the little doji close on the 15-minute there. And they're pretty much just surfing that 10-period on up. So a pretty big difference here between losing 50 cents and making 53 cents there. All right. So anywhere in between here, whether you made 10, 20, 30, 40 cents, I'd consider that a victory on the SGen right here. Of course, I think that was the only one that straight out of the comp land. And we had two in there, ZS, but that one was a stop out. Never saw the light of day again. But some decent spread in there between risk off and risk on the SGen. Now let's get up here, and what you're going to notice is not really big spreads, all right? And a lot of these spreads weren't here until the latter part of the day, or some of these took a while, all right, to get where they were going. So on this one, we had a 25 cents. We only had a dime on this one, 13 cents here and 8 cents here. Not big numerical values, but on a percentage of the gain, nothing to sneeze at. It's the pattern that we're concerned about here. Okay, so let's take a look at this short, the PRQR. A little bit thin on the volume side compared to what I like to see, and if we look down here at the single stock window here, average daily volume over the 3-month, not quite 250,000, but relatively liquid on the 15-minute candles here. So not a bad entry, right here. We get a little bit of yay and then a quick retrace on that wick action. So whether you plugged out for a little bit on that initial push or try to keep it, what do we have right here? We have it really hugging the entry line. Didn't get anywhere near the stop out price. So all in all, not a bad trade. Holly closes it out right here on the time to exit. It goes the duration. So this one is actually one that would have kept us in, believe it or not, on a break-even stop loss using the 50-50 methodology. And I always like to harp on the 50-50 method because it's a great way to get used to playing the risk-off, risk-on game by doing a little bit of both. We could have plucked out for a flat, or maybe we took a little bit off the table here because the move was so sudden. So we have a choice here. We could have flatted it with Holly on half or the whole lot, or we could have stayed in and tried to make a little bit more using a break-even stop after she calls it right here, and of course the shaded area coinciding with her time in the trade in risk-off mode. So once again, just like the stop on SGen came very close, if we were using the break-even stop here, it would have kept us in the trade, and we would have gotten to enjoy the remainder of the downside. So somewhere between 0 and 25 cents is what the risk-on, risk-off spread was on that one. And once again, whether we plucked out a nickel, a dime, or a quarter, that that comes with experience on how much you can maximize these trades. All right, so the next one was a whopping 10-cent spread between risk off and risk on. This one, once we get to the risk off end time here, this one pretty much would have we would have stayed in with a break-even stop loss as well. From the time that we get in while we're in risk off, yeah, it threw a little wiggle above the entry line, but once she calls it right here in this area in risk off, same game. We could have plucked out a half with Holly, kept the rest, kept that break-even stop loss in there, and enjoyed exiting somewhere anywhere between here and here. You know, maybe some people got out down here, just really doesn't matter. What I will point out is the 10 period acting as the hammer, keeping this thing tapped down. You know, once we start to see some closes above that 10 period, guess what happens? We gyrate back up to that entry line. All right, so I saw some questions popping in there, Steve. I guess you're knocking them out here. Just let me know if there's anything that I do need to
well,
address.
it's actually interesting. You know, Bill's talking about getting fills in real time, and he's had to break 1,000 share orders down to 250, and they sell instantly. But then you go to close the order. I don't know. I thought what he was saying there is that you're never going to really sell 1,000 shares in a block in the current market structure, and that's the way it's been for about 10 years. High frequency trading doesn't deal in 1,000 share lots. High frequency trading deals in 99 plus 1 and 100 share lots, maybe a couple, maybe 200. But that's the way it's been, and that's the way it is. And it's a function of who runs the ship, and HFT runs the ship. So big orders are broken down into small pieces and then rearranged on the other end. So if that's what you're saying.
Yeah. And 1,000 share lots, that's what we were trading back in the old days, but that's when the market.
I haven't seen one of those in a while.
Exactly. I don't even see 1,000 share prints anymore. Well, you do on some of the big ones, but you know what I'm talking about. Yeah, Bill. I'd like to spitball some ideas right now, but I'd have to think about it a little bit more. It'd probably have something to do with duplicating the strategy and sending out multiple smaller lots, right? Weird things happen in the market like that all the time. You would think that, hey, a stock like, something that trades 1 million shares a day or 500,000 should be able to execute 1,000 right off the bat, but that's not the way the algo's played.
And that's not even talking about the orders that can back away because they've got a small advantage. They see you coming, and if there's no third party, dark lit, dark pool where they can instantly make a penny or 2 pennies off your order, they'll back away even though they're advertising that they're on the bid to buy. We used to do it all the time, and people would see it in real time. You'd go to hit the bid for a few thousand shares, and even though the bid was showing 7,000 shares and you had 3,000 to sell them, you only got filled on 1,800 and everybody else left, and it just makes you scratch your head. So there's that whole component of this trading business out there as well. The phantom bids, the market making, spoofing and backing away. If there's not a reason for them to take the trade, they'll back away every time, and you can't hit them. They're phantoms.
Right, and just one more little blurb about backing away. You see, backing away used to be illegal, right, for a market maker. Well, now there's no market makers, and these ECNs, well, we all know that the major financial institutions are controlling them, but now backing away is quote unquote legal, right?
It pays to have lobbyists.
Yeah. So, yeah, I could go on a tangent and use up all the time right now, but we better not do that. But good points and good observations as well. All right, so CVAT, using that break-even stop on the short side, would have kept us in the trade. Let's see about QTT. And this one would have teased us out just a little bit. We can see right here, Holly making a not so bad entry here. We get a nice little down push, but right before exit on the timed exit on this one, only booking 7 cents. So had we used the same 50-50 methodology on this, I think there might be a little bit more meat left on the bone. Break even right here would have got us, right? So anytime where the market is looking a little bit dicey and I'm getting these strange compare count readings where the moves happening in conjunction with the CCs or the compare count readings, I'm more inclined to just stick with the hard stops because it just makes it too hard to call. Some of these things are going to go skate that break-even line like this, and are going to stop us out just by a minuscule amount, which is always painful, but hey, happens all the time. So as far as risk-on opportunity, I guess we could take a look at this little guy right here, SELB, a little bit more accustomed to what we're seeing here, break-even holding up here. And this one was a little bit more of a nice percentage gainer that we can see right here. So on the timed exit, Holly making the entry right here at 283 and exiting somewhere up here. So if we played the same game and went, okay, I'm going to go ahead and take my 12 cents with Holly on the first half. I'm going to stay in for the second lot. I'm going to resort back to my break-even stop here. Smooth sailing here. Nice little gap between the bottom that it put in there and the break-even line, and then a nice move higher, kind of bleeding below the 10 period here, but catching some traction up here, and then it was off to the races for the remainder of the day. On a little $3 stock there. A lot of people don't like lower dollar stocks, but I try not to discriminate. If it's a stock and it's going to move, I don't really care about the price unless it's Berkshire Hathaway. There is such thing as too big a price for me, but not too small. As long as it moves, hey, that's what we're all here for. So all in all, kind of a lackluster day for Holly as far as performance goes. We can see over here on the trade count of 25 total trades. If we just kind of lump these all together and say 32.59 cents to the downside, round it on up to 6. So down 60 cents on 25 trades. And that's what we're seeing from the snapshot view, 20,000 foot view. But I feel it necessary to kind of broach the topic here of, once again, expectations, because we released Holly for automation not too long ago. So when we're seeing down 60 cents on 25 trades, is that really what it is if we're executing every trade with Holly in real time and playing that game? Which, keep in mind the amount of users that are playing this game with Holly. Not everybody, because number one, you have to have a pattern day trading, or you have to have an account that's not subject to the pattern day trading rule, right? So in essence, you can't fall below 25K, which in reality, you got to have about 30K in there. You got to give yourself a little bit of wiggle room, right? So if we're using a $30,000 account, we got $5,000 downside before we would fall below 25K. So keep that in mind. Not everybody's doing this, but if you are doing this, expectations are pretty important, right? So let's go through a real world example. If we were executing every trade with Holly and going with what mode was on at the time, risk off, risk on, or the best of, right? What could we have expected in real world results today, right? So first off, and I hope everybody can see this, I kind of made it small here, but we have to talk about slippage. The difference between when the event happens in the exchange or at the exchange and the time that passes before all that data gets processed out to us in the real world, going through quote providers. They process it, push it back out to us, we process it and push it out to the end user. Now, maybe a second passes and you're like, it's not very long, but it is a very long time in the market world, where when you're co-located at the exchanges these days, they're not using milliseconds, 1/1000th of a second to measure latency. They're using microseconds, 1/10,000th of a second. Some are even using nanoseconds, 1/1,000,000th of a second. Okay, so we have to talk about slippage. So here on 25 trades, if I'm building in 4 cents of slippage per side, well, that's per side. We got 2 sides, the buy and the sell. So for 8 cents of total slippage on 25 trades, that's about 2 points of movement right there. Okay, assuming we trade 1 share per trade, which is what my Holly panels are showing here. So 2 points of slippage right there. Now let's just extrapolate for a minute. We were doing 100 share lots. Well, that's $200 right there in slippage. Okay, then we have commissions to deal with, right? Of course, nobody trades for free. And this is all action that's going through Interactive Brokers because that's the only place we have Brokerage Plus Live, right? So assuming we're trading 100 shares and we're getting $1 plus a little bit of tack on, we could say approximately $1.25 a side, which is $2.50 a trade on 25 trades. That's another $62.50 right there. Okay, so all in all, doing 100 shares of every Holly trade, taking what she's down and then folding in commission and slippage, be down about 300 bucks. Okay, so just wanted to give everybody a peek, taste. Maybe you're already aware of this, but if you're not, it's good that you're hearing this because it's real world expectations on top of what we see here because commission and slippage are not factored in. So hopefully that makes a lot of sense. If there are any details that anybody has a question on aren't clear with my midget writing here, my calculations, just let me know, and I'll be happy to go over those again. But it looks like, all right, Marguerite, what is the measure of a SIDR? Not really sure I understand the question there. Feel free to rephrase it. And while I'm waiting on that, let's just move on here because slippery slope today. Holly struggled. A lot of things are up and down. You know, for example, we had a lot of this type of action today. Things that went straight up off the open, but if you didn't cover them, boom, right back down. So slippery slope. But doesn't matter what day it is. Up day, down day, choppy day. If we're patient and we have some simplistic patterns to adhere to, and we've got some windows that are good at pointing out the things that might meet our criteria, patience was rewarded today. Patience and discipline, I should say, because we all know what the pattern that we're hunting looks like. But sometimes, especially if nothing's going on, we get a little FOMO, F-O-M-O, fear of missing out, which, you know, it's a thing. And most of the time, it's not a good thing, right? You hear a lot of experienced traders, seasoned traders, people that write books from all walks of the trading world, technical people, fundamental people, always saying, yeah, sometimes inaction is the best action. And sometimes inaction coupled with extreme, I guess, discernment for what is a good trade based on today's market conditions and not chasing things, right? It's a key, all right? Discipline. Trading is 90-something% mental, 95, 96, 97, depending on who you talk to, right? But the range breaks, this most simplistic pattern out there, what I like to call the rabbits of the forest, they're always out there. There's tons of them, all right? But it's the timing and when you catch them that decide whether they're a good trade or a chasey type trade. So I've got a couple of my favorite windows here. Actually, my most favorite window is this turbo up family no resistance, which I watch, and if the timing is there, I'll make the trade. Of course, we like to have a little bit of volume behind these things as well. So all of the ones that we're about to look at came from this window. There's 4 of them. Now, it was a little bit difficult finding these things today, so I also brought in my good buddy Andy's High-Low Pro window, which is looking for kind of the same thing. High volume stocks hitting highs and lows. Now, he's got a little bit more souped up volume metrics on his version, but all in all, there were 1, 2, 3, 4 from mine and 3 from his. Of course, we had a little overlap on one stock. Might as well go ahead and look at that one first. All right. So mRNA, what I'm going to do is just to make these stand out a little bit more, we're just going to go to the 5-minute time frame. Just expand out a little bit here. Okay. The good old-fashioned range break since the open. So here's the opening candle right here. We get a little sideways action in Myrna, and then slowly but surely, right about 35 minutes into the session, we get the breaking of that range here. My line's a little out of whack. It's messing with my number or my word there. Okay, so right at the button in real time, Myrna, boom, just barely past that break-even mark as it unfolded in real time. Could have made a nice entry. Didn't have to chase this one at all. I mean, even if you bought halfway, a third up through that bar right there, that was acceptable risk. What is the risk? You can see I've got the risk labeled here. You can see what the stock ended up doing. But how is the risk assessed here? Well, you see it coming through that line right there. We know that the volume is high on the smaller time frames. Otherwise, it wouldn't be coming through this window. Now, let's also just take a look at where MRNA finished today from a relative volume perspective. Just 2 clicks shy of 3 times normal volume on the relative side. All right, taking into consideration all these relative volumes on the tracking ETFs, well, this one was definitely a standout today. And we can see what happened after the entry signal came out here. Volume is no guarantee, but it can be the great equalizer. Now, another good thing about the things coming out of this window, the no resistance, where does that come into play? Well, take a look over here at the daily. And we can see that Myrna broke out of this little channel as of the last trading session, right? And continued higher today. When we look to the left here, where's it going to bump its head? Well, nothing is really there, right? Because this stock is also at all-time highs. A very good characteristic when you can spot a nice intraday range break that's nice and cuddly. And by the way, I was talking about risk, but I never explained it. If this candle right here is the entry bar, well, 5-minute candles here, I like to use the prior 15-minute low as my risk area. So we count back 3 bars here. 1, 2, 3. Here's the risk level right here. So never even flirted with the risk area. Risk area is down here. Reward area, multiples bigger than the risk area, which on a day like today, this is pretty much a standout trade. All right, next on the list, and these can happen at any time of the day, right? This thing could have consolidated all day and then did this, but this one popped out 35 minutes into the open. Nice and identifiable here. Let's see, MSCI, not near as pretty as the Myrna, but hey, upside is upside. And I got to say, hey, nice and steady wins the race on MSCI today. Now, let me just expand this. Well, there's really no point in expanding it. We got the open right here. This one took a little bit longer. This one took about 45 minutes, but nice and tight. I mean, I had to make, you can't even barely see the risk area right here, but that's how small it was. That's not necessarily a bad thing. Entry bar right here, 1, 2, 3, about as small as a risk as you could ever hope for. And this thing just grinded up all day. Also, if you take a look at the green line here, which you can barely see, if I expand it out a little bit, we don't get a whole lot of play. We come over here, maybe look at the 15-minute. Easier on the eyes, but check out the 10 period as well. Just riding that thing all day. Even on the 15-minute, we can clearly see the level of the break. The prior 15-minute candle is the risk, and boom, boom, boom. Now, this one, not knocking it out of the park on volume, but still on a day where all the major tracking indices are well below average, anything doing average or slightly above with a nice tight risk area like this is probably worth taking a stab at. All right, so Myrna, MSCI did really well. AZO, also not a bad play whatsoever. Not near of a multiple between risk and reward, probably the worst one of the day, but the pattern remains the same here. So entry bar right here, the prior 15-minute low right here, and once again, a nice march up, not near as cherry as the Myrna or the MSCI, but a trade that worked nonetheless. Didn't really, up here at the top, if we were waiting for the 10 period, we would have given back a lot of the profit here. But once again, another factor of all these is you just never know how far they're going to go. So AZO backed off, didn't give us near what Myrna and the MSCI did. And then lastly, from the turbo up no resistance was PayPal. All right. Looks a little bit different than the others, but once again, this is what we're focusing on here. This nice tight consolidation where buyers and sellers have become equal. That's why we get these types of patterns. Surfing that 10 period as well until a good ways into the open, about 3 hours and 45 minutes into the open. PayPal has a buyer come in. Now this one, all the way up here, nice risk to reward ratio, probably a little bit over 2x or here. Entry level right here, prior 15-minute low right here. So I probably needed to cinch that up just a little bit. There we go. But still, one of these that probably would have been a little bit difficult to get this one right here. Maybe a third of the way up was a reasonable entry, and then a nice pop to the upper extremes before, just in the next 45 minutes, all the way back down. Coincidentally, I should say, what did it gravitate back down to? Once again, the entry line. So whether it's a Holly trade with statistical probability or any of these that we're manually stalking, some of them keep going, and a lot of them, if we tried to stay in for that break even, once again, would have gotten us out. Kind of the theme of the day here. Okay, so Myrna was very cherry, and then Myrna was also duplicated from the extreme high-low pro. That was the one that we had a little overlap in. But two decent ones that were not in my no resistance, but that came through the extreme high-low pro were BP, which everybody knows and can't necessarily say love, good old British Petroleum. Now, a little bit different of a story here. You know, we had the risk level right here. I forgot to add my line. And this was your maximum reward here. So just a brief flash in the pan here. Maybe a 2xer right there, maybe a little bit shy. But if we didn't take it, quickly gravitating back down and popping back up, still riding the 10 period, never really went lower till it started having these closes here. Good thing about BPs, it's a liquid stock. You know, sometimes like it's always nice to find some of these that do this all day because you can buy and sell these levels several times over. But on this one, you know, once we got back down through here, that little game was over. But a very small opportunity to profit in BP today. And lastly, we had InBev, which out of all of these plays that I just showed you guys, the Myrna, the MSCI, the PYPL, the AZO, all large cap companies with billions on the market cap. This was the only smaller cap, as we can see down here, market cap of only 360 million, but didn't do too shabby here. Here's the entry line. I mean, you can barely see just cracking that level right here. We got the red line up there too, because that's showing us what the short-term resistance level would have been. And a short time later, boom, we go right through there. Risk area, nice and small, which this was the prior 15-minute candle. So didn't take off like a rocket, but didn't necessarily act like it was going to get us out on a stop. So what's the harm in staying in? As soon as we got past this little red line here, area of resistance, with some fervor and conviction, boom, we did have a nice little cycle up to highs there. So when we're looking at the risk to reward ratio on that one, you know, we could have put a lot of those segments in there, probably to the tune of about upwards around 5. So it doesn't look like this one's a huge mover, but when you look at the risk to reward ratio on InBev, it was pretty good. Some of the, you know, from a risk to reward ratio, one of the better ones that we had today. All right, so you know, that's about all I got for the bread and butter type intraday range breaks. Once again, the difference between this one, other than some of the volume metrics, is that these have the added benefit of being at all-time highs. So a lot of the times we can get bigger runs out of those when there's nothing for the stock to bump its head into from a supply or a resistance level. Whereas these are going to be a little bit more range bound or not be. Some of these might be at all-time highs, but a large majority of these are probably going to be a little bit range bound, I would think. So let's just do a little time check here. And I saw your question slide in there, Marguerite. Does a sideways move always mean equal number of buyers and sellers? Well, that's kind of the definition. That's typically why a stock will go sideways for any given period of time, no matter what intraday time frame you're looking at, is because, yes, buyers and sellers have become equal for that small period of time. Once the buyer or the seller steps in, then that's when we get the up or the down movement. All right, so it looks like all the questions have been tended to. If I have missed one, Steve, let me know. Otherwise, that's about all I got for today, ladies and gents, and I'm surprised I had that much considering the market conditions today. So we are pretty much at the top of the hour here with a few minutes to spare. So Scott, if you're ready to walk us out, tell everybody how they can save a little bit of money on an upgrade or maybe a new subscription if they're kicking the tires, I guess now would be a good time.
Yeah, thanks everyone. Thanks Jamie and Steve. So on the way out, there's an ebook. Both Jamie and Steve contributed chapters to it, so you should get a copy if you don't have it already. Just go to trade-ideas.com/ebook, put in your email address to get the download link for 5 ways to win in a post-BTFD market. It's got 5 strategies for a crazy market. Put those in your back pocket. We have a podcast. We put them out almost every week. Search for Trade Ideas Podcast wherever you listen to your podcasts and add the subscription. Check out the back issues. Stay tuned and get ready for the next one. There's a code that's good this month. AutoHolly, all caps. That lets you save 15% off your first month or year of Trade Ideas. You can also use that same code to do an upgrade from standard to premium or save on adding a brokerage plus license to your premium account to get auto trading. Any questions, email us info@trade-ideas.com. That goes into our help desk software. It's the best place to send your questions. You can follow Steve on Twitter at TodayTrader. Jamie Hodge is at QuantBot. We have Facebook.com/TradeIdeasPros, the Facebook page to follow and share with your friends. When we get the recording converted and up, you'll get an email reminder tomorrow about how to find that playlist. So stay tuned for that. Thanks, Jamie. Thanks, Steve. Have a good one.